So let me explain the methodology. Shane, if we go back to where we were, and then we need to go down to line 428, please. That's it. Now we need to go down to line 428. This is the start of Shane's result. There it is. That's it. There's a little graph there. Okay. This is a graph of the drawdowns, the drawdown in, as expressed in R multiples. So you can see here that, well, first thing you can notice out is that wicked drawdown Shane made for us. Not only because it's wicked, but it had the double dip, which I reckon is double wicked. But you can see that was, I'm sure Shane's chuckling away there. But the drawdown, this only shows the drawdown, the negative drawdowns. It doesn't show the positive themselves. So you can see here that an average drawdown for this methodology, when we use the 25R, is roughly around about 4, -4. There's a couple there that are -7, and then we get a good period, and then we hit this devilish big double dip drawdown. So what I said to myself was, well, if I was trading this and I wanted to be reasonably aggressive with the break, then I need to be aggressive starting when I get a certain R multiple drawdown. Now I used a drawdown of 3. That was before I actually saw this graph. Looking at this graph, I would probably be comfortable now using 4, but I actually used 3 before I saw this graph. So we now need to look at these results, Shane, and just to the right of the graph, there are 4 or 5 columns that show the results and what we need to do. Now, Shane, you'll just need to move that graph to the left a little bit because it's blocking one of the columns. That's it. That'll do. That's it. It's fine. Okay, just underneath. Now, looking across. No, up a bit more. I need to go back to the 3.9. That's it. That red 3.9 needs to go down a little bit more, please. We need to go back to line 400, and that's it, 428. Okay. A little bit further down. That's it. Okay, great, excellent. Now this is where we start to get interesting, and that we start to get a drawdown in the account. We're currently trading with 7 lots. The equity is about 43,000, and we started to draw down. You can start to see we're starting to about 15% down, 20% down, and we're starting to get an R drawdown. That's right. Now, as soon as we get the R drawdown gets above 3, that's when I put the break in. So our system says, oh sorry, our balance is 32,000, and we're in a drawdown, and the system would normally, without a break, would normally use 5 lots. In other words, just gone down from 7 to 6, now to 5. But because I've now included a switch that says let's get more aggressive with the drawdown, and because the drawdown is bigger than the 3, I'm going to take the number of, I'm going to reduce the level of 5 by the number of R multiples that we're down. So I've taken 4 off, and you can see there that the next trade is only 1 lot. Now that's pretty aggressive, especially at this stage. It's not quite so aggressive when we start trading with more lots. That trade happened to be a small winner and brought our capital up a little bit more, that we could use 6 lots. But again, because our R multiple was still above 3, I took 3 off. So that allowed us to use 3 lots on the next trade, which was a winner. Now that put us underneath our our switch of, say, -3, which means I can go then back to the normal lot number for that size account, which is determined to be 6. So you can see that it was very quick to go down and just as quick to go back up again, because the winning sequence allowed us to do that. In fact, there was about 4 little wins in a row there, which allowed us to do it. Now let's scan down this column slowly, Shane, until we get to a bigger drawdown, and we'll start to see how this break. See, while we're operating within what I call normal operating, okay, well, that green line there tells us that it didn't take us very long to get back into profit. That's a new equity high. And you can see, because we're operating back at 6 and 7 lots, how quick it was to make up that loss. If we had been not as aggressive at increasing our lots, we would still be back down at 1 or 2 and still trying to dig ourselves out of this drawdown. Whereas this methodology here helps us get out of that fairly quickly. And in fact, you can see the R multiples. If you're just looking up the drawdown in R multiples, there's only about 1 or 2, which is next to nothing. Basically, it just means that our system is operating normally. Even though we may be in a physical dollar drawdown, our system in fact is operating within normal parameters. So let's go down further, Shane, and we get to another drawdown stage. You've got a devilish of a drawdown coming up. You can see here again winning trade, so of course there's no problems. We're increasing our lot size. We're now up to 11, now up to 12. You can see the bank increasing exponentially as we get up to 150,000, 170,000. Things is this drawdown of yours, Shane, coming up sometime. Here we go. Now we start to strike a few losers. So we're trading at 15 lots and we strike a few losers in a row, and now we're having to employ the break. So instead of 15 lots, we take off 3 and go to 12. Yeah, exactly. Okay, and you look further down, you start to see we get all these string of losses. Winner, and you get these 8 or 9 or 10 losses. And you can see the effect that it's having on our R drawdown. But you can see that instead of 13 lots, we've gone down to 3 or 4. So it's been